Well, good evening, everyone. Definitely from around the globe this evening. My name's Bobby Smith. I'm the Vice President of Marketing for ForexStat. My privilege this evening is to introduce our guest speaker. We have a tremendous evening planned for you tonight. We are pleased to begin session one of a three-part series of the software tutorial webinars. Now, we are privileged this evening to have with us the ForexStat software architect, Mr. Joseph Nemeth. Before I bring him to the line, I'm just going to do a little bit of housekeeping. If you notice, you have a little bar that is probably either up in the right-hand corner or in the lower right-hand corner of your screen. You do have the opportunity to ask questions during this webinar. This evening, we are asking that all questions that are being asked or all questions that will be asked directly to Mr. Nemeth will be technical questions only. While he is talking, I will be on the back side of this addressing any questions that are not technical related. So again, just be sure that we do our best to keep the questions clean and clear and move forward with that being said. So with no further ado, let me locate Mr. Nemeth over here in my staff bar, and let me bring him to the speaker. Mr. Nemeth, are you here with us?
Good evening, Bobby. I'm here.
Excellent. Good evening, Joseph. How are you this evening?
I'm doing very well, and also good morning to all our friends in Australia as well as Asia. We're going to be recording this webinar, I'm sure. So my friends who are still sleeping at this hour in Europe will be able to see it at their leisure. And of course, good evening to everyone in North America and any place close to us. So tonight we're going to start, as you mentioned, the session one of a three-part educational series on how to number one, understand the software. My screen should be showing how to understand the software, how to be able to tell what is really going on, how the software works in the background. And what we will attempt to do in the second part is we will actually build a real live trading strategy that everyone will get access to, and then you'll be able to monitor it, from this moment forward on your own in real time as what we put together is going to be applied to a real live trading environment. So we did a I think very informative session last Wednesday when we talked about the inner workings of ForexStat, and I understand we have a lot of new people tonight. So rather than leaving the people wondering what it is what we're talking about, the new folks I'm talking about, we will briefly summarize what we discussed last Wednesday, and then that will help us move to the point that I'd like to explore today, and that is the actual strategy development for those people who really wonder, what this function means and why is this trade open and why didn't something happen. I thought it should have happened and didn't happen. It happened last time. Now it's not happening. So hopefully a lot of those questions will be answered by the end of today's webinar. And obviously everybody's invited to session number 2, which will be even a more advanced tutorial. And then finally, session number 3, it will be for those who actually want to create their own strategies and basically who want to take total control of the software and run their own show. So First of all, go into the very basics. What you're looking at right here in the middle of my screen, this square box, that is the dashboard or the main window of our software. Now I'm looking at several buttons, and these buttons open up various windows, and the various windows represent the various different modules within the software. All the modules work together as a team. Nothing will perform or no module will perform without the help of the other modules. Now, the other thing that you will notice that the software doesn't use charts anywhere. You will not find any charts. Instead of the charts, what you will see is this window over here, and you get that by clicking on the Trends button right here. This is our Trends window module, and the Trends window displays, for the most part, a bunch of arrows. There are only two colors, though. Red means the market's going down, and green means the market's going up. Don't really pay a whole lot of attention to these blue lines, because that only means that we are currently not broadcasting the arrows for these particular pairs. So on the left-hand side, the first column on the left-hand side, this is the actual symbol of the currency pair that we do support. Currently, we are broadcasting signals or arrows or directions of the market on these 8 pairs, the ones that do have arrows next to them. And the reason for that is because none of our current clients are trading any of these other instruments or any of these other pairs. And it is quite complicated to generate these symbols also. It takes a lot of bandwidth. Each and every 24-hour period for each one of the symbols, we're not including the data, the price changes, just the changes in the direction as well as changes in the market strength. We are broadcasting about 4 million signals each and every day for each and every one of these pairs. So it is rather bandwidth intensive to do this. So if we don't have to broadcast it, we don't broadcast it, just so that our servers are not so overloaded. Now, what you're looking at when you're looking at these arrows, you're looking at the direction of the market that is determined by our proprietary algorithms that we use in the background to determine which way the market is going in 8 different time intervals. And when you look on top of this chart or top of the window, you see 8 columns, and these columns represent the individual time intervals from 1 minute, 5 minute, 15 minute, 30, 60, 240, daily, and weekly. So if I want to know what is going on in euro dollar, I will go down here, find euro dollar. The symbols are in alphabetical order, and I will come across and look at the arrows. And those of you who like to look at charts, you will see that on a 1 minute chart, the market is trying to go up. Same thing on the 5 minute, 15, 30, 60, 240 in a daily chart. Now, why do I think that this is important information? Well, first of all, most people, particularly amateur traders, it doesn't matter what type of course, foreign currency course they go to, or what type of information they're getting. The bottom line is most people get confused by charts. They just simply don't have the experience to read them. And at the end of the day, what is most important is really the direction of the market. So we have our own algorithms that read the markets, and they look at the relative price change in the market, and if the price is increasing, and if the price is increasing, then obviously the market's going up, and we will broadcast a green arrow. If the price is decreasing, we will broadcast a red arrow, meaning that the market is going down. You don't need to be looking at charts and get confused, because the only reason why people look at charts is to predict the direction of the market. Well, we do that. We do that for you. Don't have to worry about it. And I challenge anyone to go look at any of these charts, and you will know that we're reading it correctly. Now, these arrows, they are basically green and red, but this is pretty pretty black and white. You know, you don't. One thing is the direction of the market, but the other thing is how fast that market is going up or how fast that market is going down, and we call that market strength. And for that, we have developed another proprietary indicator that we call market strength. And you get to the market strength where when you're on this window anywhere, click on the right mouse button like that, and you will get a bunch of numbers, red numbers and green numbers. Similarly, when the market is going up, that will be represented with green numbers with the plus sign in front of the number. And on the other hand, when the market is going down, that will be represented with a red number with a minus sign in front of it. So going back to the euro dollar, we see that the market strength is plus 60, 67, 67, 67, 68, 34, and minus 40, which but exactly corresponds with the arrow. So the arrow might be green, but we don't know how strong that market is. When we click over, we see that it's more than plus 50. Now, the market strength is a indicator that measures the strength of the market from minus 100, which obviously would be in red, all the way through plus 100, which is in green. And minus 100 represents the strongest measurable by us, the strongest measurable market to the downside. The plus 100 is the exact opposite. Market is going up, and we don't measure it any stronger. That's as strong as it gets as far as we're concerned. At that point, you need to be somewhat careful, because the chances are it might be reversing. The markets don't stay at plus 100 or minus 100 for very long. So this gives you an idea of how strong the market is in each direction. And obviously, as you can tell, we're broadcasting a lot more signals here. This is really not as bandwidth intensive as the arrows. So there we are. So anyway, by looking at just one chart or one window, I have a complete overview of the entire market. So it would be, when I look at these 8 pairs right here with the green and red arrows, it's the equivalent of me looking at 64 different charts on one screen and really understanding the direction of the market, at the very same time. So that's that. Now, when I turned over to the market strength window, then I see the strength of each market, and not only the direction, but how fast it is dropping, or how fast it is ascending or going up. So that's that. Now, the other thing is that if I want to go in and zero in or drill down on, say, euro dollar and see a little deeper how the market is behaving, I'll go to this next module. We call it TS matrix, and TS stands for trade signal or trading signal. So I'll click on that. I'll find the pair that I'm looking for, euro dollar. That's down here, again in alphabetical order. Down here, I'll click on it. It'll take a little bit, and guess what? What you see on the left-hand side is several of our trending indicators, some of our strategies. variables that we use to build our strategies, that we draw the direction of the market from. And as a matter of fact, right, the top line is corresponding exactly to the numbers that you saw right here on the well, my tongue is tied, on the trend signal matrix. So when I switch over to the market strength and I look at the market strength numbers, I see 59, 70, 67, 67, which is basically the same thing here. 59, 70, 67, 67. Then we've got 68, which is right here. And then we've got 34, 34, and minus 40, minus. So that's basically the same thing. We're just repeating that in this window. The other thing is that the next line, which is the first line of arrows, will tell us exactly the same thing that we saw over here. That's the trend indicator. All the arrows are green except the last one on the weekly time frame. We're not broadcasting the arrow, or we're not putting the arrow in the one minute time frame, because really it is insignificant. It changes all the time, and anybody who's a trader will not even consider looking at that. That's a waste of time. So coming back to, and we're looking at this in real time. You obviously saw this change on the 1 minute. That doesn't mean anything, but still, if you want to be looking at it, if there's nothing better on TV, then knock yourself out. Basically, we are looking at the real-time development in the market right now as we speak. As the market unfolds, we see what is going on. We, in addition to some of our proprietary strategies over here, we have moving averages 7, 14, 50, as well as overbought, oversold conditions, breakout conditions, and retracement conditions. And you will see from time to time how these various strategies and various conditions get populated with arrows, again, to the upside when the market is going up, or to the downside, red arrows, when the market's going down. So that's that. And when we build our strategy later in a few minutes, then we will be coming back to this, and I'll show you how we use that. And it's pretty neat, pretty slick. So that's that. Now, the next module I want to bring your attention to is this one over here, called the harvester. And the harvester module is basically what runs the software. What an engine would be to a car, that's what the harvester module is to ForexStat. This is where we actually create our mathematical algorithms, and in this particular setup, you see that the harvesters, we call them harvesters for a reason that I'll explain later. But if I say the word harvester, it is synonymous with the word algorithm. So a harvester, algorithm, they are interchangeable. I'll be using them back and forth depending on what's what comes to my tongue at the time. So what we're looking at is a setup, a strategy or a trading setup that consists of a total of 80 different algorithms or harvesters. And each algorithm has specific parameters that it is comprised of. One of them being what we call a deal formula, which is a simple. This is probably the simplest part of the algorithm. This is the definition of the size of the trade, profit stop entry, trailing stop entry, etc. we'll be getting into that in a little later, a little bit later. Plus, there's a lot of these other functions that determine the various parameters. Everything is based on numbers, even though you don't really see a whole lot of numbers here. Every entry that you put in the fields that will populate each harvester or each algorithm is a variable, and when you're setting it up, you just need to think logically what you want that specific harvester to do.
Joseph?
People. Yes.
I hate to interrupt you, but I'm having several people ask if there's any way you can make the presentation screens larger. They're having trouble viewing the numbers and the boxes. Thank you so very much.
All right, would that be better? There's still a lot of white. I mean, I don't think the numbers are
I think we can see
bigger.
We can see the boxes better, certainly over in the instructionals on the left with that width better for sure, Joseph. Thank you.
All right, no problem. I can just go full screen like this. So we've got 80 algorithms. Each algorithm exists in and of itself independently of the other algorithms, but at the same time, all algorithms are part of the same strategy. Each algorithm starts with certain conditions that have to be present in the market that are defined in the advanced management window. That's over here. By clicking on it, this window pops up. And the purpose of this window is to define two things. One is an event. It's something that is happening in the marketplace that has to be present or not present, right? And when that event is present, what action do we want to take as a result of that event being present? So we can start an algorithm, stop it, we can start all of them, we can stop all of them, we can restart them, we can start a different one. We can disable those algorithms. We can switch algorithms. We can set our profit target, etc. There's all together about 38 million different variations of these types of setups. I don't think I will live long enough to try them all out, but the fact that they are there, it makes the software pretty versatile. Anything you can think of, pretty much, you can program into here, and you don't have to be a programmer. You just need to think logically and think like a computer, pretty much. If this happens, I want this to happen. When that happens, let's start trading or let's stop trading based on the parameters set within the algorithm itself, and we'll be going over that very shortly. One part of the algorithm is what we call trade recovery, and trade recovery is very much a part of every one of our strategies that we use. Because our trading philosophy is that we would rather make something than lose money. And we believe that we have figured out a mathematical way to work out of any possible losing trade that the software might have to deal with from varying, changing, reversing markets. So that doesn't, what I'm trying to say is that not every trade that the software opens is going to be a winning trade. The market might reverse the very second the trade comes on. So the difference between you placing the trade manually or the software doing it doing it electronically using the automated algorithms, can still cause the trade to be going in the opposite direction than the market. There's no difference there. But what the software will attempt to do, by the very fact that it has all of these other algorithms involved in the same strategy, is that it will deploy the other algorithms to go and save that bad trade. It's like the special ops go into Afghanistan, and they lose a few soldiers in the forest over there. Then they will send more troops in. They will send in support to recover their soldiers. I don't know how better to describe than that. But so when a trade goes bad, we deploy other algorithms, including trade recovery. We have several different types of trade recoveries, which are nothing more than mathematical sequences that evaluate the existing trade and then make decisions based on the situation in the market. They might hedge the trade, or they might dollar cost average it, but it is all pre-programmed in the setup as part of all of these algorithms. Now, this particular setup, as I mentioned, has 80 algorithms. It can open 80 different trades. But at the same time, each algorithm has its own trade recovery. In this particular case, it is what we call the zone recovery. And each recovery in this case has two possible trades. So two legs, we call them legs. Now, we could build a recovery to have as many as 20 legs, 14 legs. But we have to be careful, because we don't want to treat the recovery as a martingale. That would be extremely dangerous, and I warn everybody who wants to set up their own recoveries, be extremely careful. Limited to 2, maybe 4 legs maximum. Okay, so having said that, let's assume that we set up this strategy. Okay, let's bring this window down a little bit. Let's close it, and then open the next module, which we call the Open Deals window. There's several Open Deals window. In fact, there's 11 of them. If you can imagine a filing cabinet with 10 drawers, each one of these Open Deals window is almost like a separate drawer in a filing cabinet. Each trade that the software generates, or each trade that the harvester module generates out of the algorithms that exist within it, is placed in one of these Open Deals windows for easier management. Now, the global Open Deals window is actually a summary of all trades in all of these windows. So let's look and see what we have in here. So right here in this, let me open it up again for you, if that helps. Oh, I'm stuck. Sorry about that. There we go. We have the existing trades that are still open. These trades have not been closed yet. They are open. It's like, let's just say that you have a car dealership, and you're selling cars. Well, before you can sell them, you have to buy them from the manufacturer or from an auction or what have you. And while they're sitting on your showroom floor or in your lot, they're waiting for the right buyer. Similarly, these trades are waiting for the proper conditions and for the proper time to arrive, at which time we'll close them, or the software will close them with a profit. And that time may be 5 minutes, it may be 5 days, it might be 5 weeks. It really depends on how active the market is and what type of a strategy you use. So right here, what we're looking at is that we have down here, this is our summary bar, right? This is where we have this is where we have all the existing trades being summarized. So totally we have 31 trades. We can go count them from here, 1, 2, 3, 4, 5, all the way to 31. Trust me, there's 31 of them. The total size of all of these trades combined is 354.4 mini lots. We are currently in these existing trades underwater, if you will, by $11,619, right? That's what these existing trades are representing. The next variable right here, the next number, is actually the most important one. And this is the number that tells us how much profit we still need to generate in order to close all of these deals with a profit. But not just all of these deals, but also deals, when I say deals, that means trades, but also all of the trades that have already been closed since the last trading sequence. So since this new trading sequence started, how much do we need more in order to achieve our profit target? And we will find that profit target in this section right here. We call it CAD, which stands for Close All Deals of total running positions, and we have the profit target defined right here. And you can't really change it right now. If I wanted to change it, I'd go over here, but I don't want to do that, and I'd have to apply the changes right here. Let's just say that I want to change the profit target on orphans. Right there, I would, and in order to make that change stick, I'd have to press that button, and then I need to confirm, are you sure to apply open deals changes? Let's just say yes. So now I don't have a profit target on orphans. Orphans are simply trades that are running without the algorithm that has created it. But we'll get to that in just a little bit. I'm going to put that back in. I think I had 500 in here. Let's put 500. Again, I'll save the changes, and that's back. That is back in. So we've got total of 31 trades. We're down about 11,600 on this particular trading sequence, but we only need about 10,000 to close all deals, and that tells me that we've already closed about 2,600 in positive trades that are sitting in the closed deals window, and I'll show you that in just a little bit as well. But of all these trades that are open, there are some short ones and there's long ones. So down here, this is the summary of all the longs, and this is the summary of the shorts. So when you add up, well, actually when you click on the summary of the longs, all the longs will be highlighted, right? There they are. That's all of them. When you add them all up, you'll discover that the total size of the longs is 174.4 mini lots. And then when you highlight the shorts, you'll have the short. When you click on the short summary, you'll have all the individual short trades summarized, highlighted. And if you were to add them up, you'll find out you've got a total size of 180 mini lots. So when you add up these two numbers all together, that gives you this total of 354.4. Obviously, that's 174.4 plus 180, 354.4. Those are all the trades that are open. However, this is not the trades that the broker is keeping track of. Only we keep track of these trades, because I'll close this window. I'll go into the broker window, and actually, before I do that, let me go back and open it. If we were to deduct the difference, or deduct the smaller number from the larger number, we'll find out that 180 minus 174.4 equals what? 5.6. So if my math is correct and the broker's math is correct, then we should have a net position of 5.6 mini lots, or a position of 56,000 pound yen short, net short, as far as the broker can see. So let's look at the broker. The broker window is showing exactly that, 56,000 sell, which means short. That's what the broker can see. And he doesn't see any of our individual open trades. And this allows us to be able to trade in both directions at the same time without having to deal with the broker telling us, no, you can't do that, you can't hedge, and all that nonsense. So we just handle it. We just handle it on the inside on our platform internally, and then we go and close these trades individually. So that would be that. We set the profits right on top, and there's a couple other functions that determine the behavior of the various closing sequences. So I'll close that, and I'll go into the closed deals window. And the closed deals window, as the name implies, shows us each and every single trade that the software opened and already closed. So this is basically should be money in the bank. We'll click here on the history button. I'll move all the symbols into, I'll select them all into this right-hand window, and I'll just click on the process, and this will bring up the history of each and every trade so far that the software generated and then ultimately closed. What we're looking at is basically the listing of all the trades, but there it's listed in the various parameters are listed in the different columns over here. I'll describe them very briefly. On the very left-hand side, this is the instrument or the currency pair that is being traded. This is the next column is the deal formula. This is the direction. A deal formula is part of the algorithm, part of the harvester. What we see is the shorthand. I'll explain how that works. Then we've got the size of each trade. Now what we can do, we can actually sort each and every column by clicking on the on top of the column or the title of the column, and we can sort by when the trade was when the first trade was open to when the last trade was open or closed, the size of the trade, the profit. The largest profit we had was 196 pips. The largest losing trade we had was 291 minus 291 pips, and so on. So getting back to my description here, there's the size when the trade was open, exactly to the second, what the open price was, and this is the price that the broker gave us. We might not. We might have requested the trade at a different price, but this is the actual price at which the broker filled us. This is the time when the trade was closed. This was the price at which we closed the trade, confirmed by the broker, and this is our total profit. This is the harvester or the algorithm that created or generated the trade, and this is the function that closed the trade. I can also sort by that function. So when I'm analyzing my strategy, this is a very important tool to me, because I want to see if a strategy is not working properly. If the strategy is not working properly, then I will go and analyze it and see what functions are not closing the right trades, or which functions are closing the most losing trades, and then I can go back in and tweak my strategy to fix that. Also, I can organize or sort my trades by the open deals window. Oops. Or it just so happens that all the trades are really in open deals window number 1. But I can go and trade and sort my trades by the harvester number. So I see that I had 4 trades from harvester ID number 1. I had these 3 trades from harvester ID number 2. Now, where do I have those ID numbers from? Remember when we were looking at the harvester window in the harvester, well, by clicking the harvester button over here, we open the harvester window, and each algorithm, each harvester has an ID number, right? You see all the way from 1 all the way to the last one down here being 80. So if I want to find out how much money I made from trades generated by harvester number 1, I'll just sort my harvester column by the ascending harvester ID, and I'll highlight the IDs, the same ID, and it will give me the summary. And I know here that from selected 4 deals, I made a total of $242, and that's those 4 that are harvester ID trades generated by harvester ID number 1. Now, if I want to see what I made on harvester, let's just pick a number 21, then I'll go and highlight all of these 21s. There's more of them. The last one is down here. So harvester number 21 generated $4,669 as opposed to 200 some dollars. So which harvester do you think is producing better? Obviously, there's no question. And then I can go back to my harvester window and look at harvester number 21 and say right there, and look at its parameters and say, wow, I really like this one. So what can I do to make the other ones perform better? And I might copy some of its characteristics into my less performing ones, right? So getting back to the closed deals, also I can sort by the direction. How much money did I make from the short side in my entire history? I'll just get to the last short trade. That's that. So out of the $54,000, $19,927 came from short trades. And the rest of it, I bet you, there's no other trades, just short and long. That was, the long side. Looks like the long side lost some money. Let's go back to the short side. Oh, whoops, I read it wrong. The short side made $199,276. I'm sorry, I read that wrong. And my long trades, right here, my long trades lost $145,252. Well, thank goodness for trade recovery, because it doesn't really matter. I'm still up $54,000, right? So that's our closed deals window. And again, this lists each and every trade that the software ever generated and then subsequently closed. Bobby, I'll pause here for just a minute. And if you have any questions related to what we covered, then I'll be more than happy to answer those.
Okay, Joseph. Well, I've got a tremendous amount of questions here. The majority of them are on trading, more so than on the software itself. However, you know, let's just go back to some basics. We've got a few people here that are confused. They don't even understand what sequencing is. So if you could just give a quick overview on what a sequence is as you're walking through a trade or walking through the software, that would be a good place to start, Joseph.
Well, I was going to do the sequencing in actually time lapse, because that's the next thing. I'm going to go to a time lapse and actually let the software run and see how the trades are being generated, opened, and closed, so that folks have a little better understanding of how that comes together in real life.
Perfect.
how it happens in real life. There's just one other thing that I'd like to explain, and that would be the working orders. The working orders window basically lists all the orders that have not been filled yet have been generated by the software, by the various algorithms. Each algorithm has its own ID number, so we see over here which trade is being, or which order is being generated by which algorithm. There is again an order ID for each one, the direction. There's the stop. Every trade that we put, pretty much every trade that we place is a stop trade. We trade in the direction of the market, not against it. Also, there's the size of each trade, and most importantly, the price at which we want this order to be filled. When the price in the market reaches this point, or that, it doesn't matter, any point that is associated with the order will be placed if it is found in this window. Now, not every trade that is found in the window will be filled, because as the market conditions change, the software might determine, hey, I don't want that trade anymore. I want a different trade. I want to replace these trades with these trades. And then the software will cancel them. The individual algorithms will be stopped and new ones restarted at different price points, etc. Now, in the broker side, normally you would see these trades, but we don't want to show our hand. It's like when you're playing poker, you don't want to show your hand to your opponents. That would be kind of silly. And that's exactly what it is when you show your hands to the broker, when you show him what kind of trades you're planning to place, because they can figure out your strategy. And if they're trading against you, not a good thing for them to know what you're doing. So what we have over here in the settings, we have a mode that we call the stealth mode, and I'll show you how that works. I'll open the broker window over here. If I turn off the stealth mode, then the broker sees all your orders, right? So there's a total of 51 working orders that are unfilled, and we don't want these orders to be out there on the right in front of the broker. So what we do, we trade with the stealth mode. With the stealth mode on, this will disappear in just a little bit. Oops, there we go. I have a pretty slow connection right now, so that's what it is. Excuse me. So now the broker only sees our net position. It tells us that we've got 140,700 cash available in the account. I'll get out of that for now, and what I'd like to do is show you exactly how this thing comes together when we actually launch it into the market. Okay. Now we could be looking at the real time, and we could be looking at placing of the orders and also closing of the orders, but this would be like watching paint dry. It would take a long time, or it'd be really boring until an order gets generated. So what I'm going to do, I'm going to speed up time using data from the past, and put a strategy through the paces, and show you really in a time lapse, kind of very fast how things happen when in real time, in a real time speed, except this will be much faster. For that, I will use a module that I call the simulator, and the simulator will allow me to do exactly what I'm planning on doing. The difference between the simulator module and the regular software module is only this one button down here that says simulator. And the simulator is nothing more than a data cruncher. It will crunch through data and process our strategy in not in real time, but it will process real data, real historical data, much faster than if we had to watch it in real time. Real time is very, very slow. So we're going to speed up the real time to less than 5 milliseconds per minute. So in other words, in about 5 minutes, we can cover about a month. Okay. So we've got the data. We've got the data already logged in, but what we want to be looking at is the open deals window. I'll have the open deals window over here. And in this window, we will be seeing all the trades that are being open. And then we'll have the closed deals window that will be down here. The closed deals window, we will have all the trades that are being closed. And there's the summary, the money that we're making or losing. And similarly, down here, there's the summary of all the trades that will be open at any given time. Now we're looking at trading pound yen. Look at the harvester. This particular harvester has 20 algorithms. Each one has its own zone recovery parameters already set up. There's 2 legs for each one of them. The harvesters are set up. The open deals window has a profit target set up. In fact, I will change this to pips. We're going to be targeting 100 pips. And yeah, that's all in pips. That's fine. We will also have the order window over here, and the working orders window. It will show all the pending orders that are being queued up for execution, and you will see how they're being generated, and then at the same time how they're being canceled when several different things happen in the market. So that's probably about it. Let's get the harvesters ready to start trading. We've got the data queued up. I'm going to run the data, and you will see the time of the quote, and this time ticker will be going very, very, very fast. We'll start, say, for simplicity, we'll start on the first day of January 2012, about midnight, and we'll let this thing go, see what happens, how this strategy is going to perform. We're not really concerned about the performance, however. We're concerned about the mechanics. We want to see what really happens, how the software trades. So let's just say, let's just start our harvesters. This is how you start trading. Now the harvesters are queued up to start trading, basically. I'll close that window because we don't need it. The harvesters are running, and then we run the data, and you see the minutes go by very, very fast. Every time the software opens a trade, that trade gets moved over here in the open deals window, and when the software closes the trade, it will move down here to the closed deals window. As you can tell, we're already on the second day of January. We have a couple of lines going here. The one line on the bottom, this is the direction of the market. This is what the market's doing. It's going up, then it's kind of flat. Now it went up just a little bit. Now it's flat again. And this is the equity curve of our open trades right now. We don't really have any closed trades yet. When we do have closed trades, then we will see a green line that will show the summary of closed trades, and it will be an equity curve of the profits and losses in the open deals window. So right now we're looking at 7:30 a.m. on the 2nd of January. The market is kind of slow. I mean, this is the first day of trading. what we can do to get a better idea of what happens a little faster. We don't want to be here all day. I'll speed that up a little bit, and also I'll remove drawing of the graph. Everything will go faster. You see how quickly the minutes are running by. Also, you're seeing how the value of the trades is changing, how the trades are, how the orders are being added or removed. The TR on at the end of the harvester ID means that this is a trade recovery trade. In this particular case, these are zone recovery trades. So here we are on the 6th day. Not much is happening. We've got a total of 21 trades. We closed one right here, and now we closed another one. Boom. This is close all deals. So now we've got 74.4 pips already banked, and the whole sequence continues. Let's look at the market. As I mentioned, once we start closing trades, there will be another line. This is the equity curve of the closed trades. The red line is actually the equity line of the open trades, and the blue line is a summary of both. Since we didn't have any red or green before, we only had the blue one because it looks at the blue line symbolizes the summary of both open and closed trades. So in other words, this is the liquidation value. All right, so let's go a little faster here, and so the market seems to be moving a little bit to the upside. We've got 2 mini lots on the long side. Right now we're flat. We're flat again. We're short. We're flat. 3.5 short. Now we're short. Net short. We're flat. As the market is doing its own thing, the software is adapting to the different direction that the market is taking, and until we take the profit. And here we took the profit. So far, we're on the 16th day of January. Right here, we've closed a total of 43 trades. Right here, this is the summary. This is the summary of all the total mini lots that we've closed, and we're up 104 pips, and we actually had the global close rate here.
Joseph, real quickly,
Yes.
just a quick question that I think is probably timely right now, because you've used both terms, zone recovery and trade recovery. Can you please explain the difference, or if there is any?
In this particular case, I'm using those as synonyms because this particular setup has zone recovery for trade recovery. Trade recovery, we have 5 different trade recoveries, or 5 different options for trade recoveries. Dollar cost averaging, simple dollar cost averaging, advanced dollar cost averaging. Then we've got zone trading using a simple deal formula, second deal formula. These are just some advanced functions. But if you were to open this pull-down menu on the trade recovery, then you see 1, 2, 3, 4, 5, 6, 7 actually, but it's really only 5 because two are the same. They're just using a slightly different parameter. So there's different ways to recover from losing trades. This particular case, we're using the zone recovery algorithm that is set up for 2 zone recovery legs. So when I say zone recovery, that's just the specific trade recovery that we're using. We could be using advanced dollar cost averaging or cost position improvement, which would be another one. But in this case, it's zone recovery. So I use them as synonyms. Okay, so here we are at the end of January 3rd, 5th, actually there was the weekend, 6th day of February, we're up about 405 pips. And let's see what the market is doing. It doesn't matter whether market is going up or down. The software adjusts. As right now you see that we're net long. We've got more trades to the upside than to the downside, and we can tell why, because the market is going up. Once the market reverses, we'll be changing that position, and the software will be doing that automatically. Okay, so this is how it really happens. I mean, we could do this for a lot longer, but the basic idea is let the software run and let the mathematics of the harvesters or of the algorithms take care of whatever needs to be taken care of, and the software will open trades, will close trades, and hopefully at the end of each sequence, actually, at the end of each sequence, you will be adding money to profits to your account. Now, I use the word sequence here, Bobby, and what is a sequence? Well, a sequence is a trading sequence starts with the very first trade that you make and ends with the very last trade that you make, and when you have no more trades open. So in between times that you don't have any trades open, all of that is a sequence. A sequence starts with the very first trade, and the algorithms using that trade are seeking a profit. When that profit is reached, the trade is closed, and a new sequence automatically begins at that point. If the trade becomes doesn't reach the profit, or it needs to have trade recovery, additional trades will be open for that sequence. The idea is that we don't trade with one trade. We don't open one trade and then hope that the market is going to go in our direction. We obviously like the market to go in our direction, but if it doesn't go in our direction, we deploy additional harvesters to open other trades for that very same trading sequence. A trading sequence could have 200 trades, could only have one trade, but it is from when we start trading until we captured our predetermined profit, and then we close all trades because we've captured that profit. Next time a trade gets open, it's part of the next sequence. When that sequence gets closed, that's it. Money's in the bank. Okay, so right now this particular sequence has 3 trades. And if I were to go back up here, I'm going to expand the closed deals window. Over here we had a global close all deals, which is basically the end of a trading sequence. The first trade right after that is the beginning of the next trading sequence, and that trading sequence ends with the last trade that was part of the global close all deals. So this particular sequence, as I have highlighted it, this is one sequence. Guess what? It generated selected deals, 40 deals. This particular sequence had 40 trades, total of 24.8 mini lots. Total PIP P&L, total PIP profit was plus 114.6. Now the next trading sequence starts right here with the next trade, and so far there's 4 trades of the next sequence. But now we had the global close. So initially we had these 4 trades, and that was plus 51.3 until this is running right there, until we closed them all, and at which time we captured 102.3 pips. Now why around 100 every time? because that's what the global close all deals variable is set to, 100 pips. So the software will be seeking 100 pips all the time, every trading sequence, and it will not rest until it reaches it or captures it, right? So let's look at what the market's been doing. And now, in the meantime, while you have a trading sequence open, we're basically potentially looking at drawdowns. A drawdown is a series of trades that have not matured enough to be closed with a profit, and that you know, that drawdown can vary. It could be several % of your total account. It could be several tens of %. The bottom line is one needs to trade carefully so you don't exhaust your account inside of a trading sequence, so that you don't use all the money, because then there could be a margin call from the broker, and what that means that you don't have any more money to buy any new inventory. We're not going to let you open any more trades. Now, what we see here on the equity curve is basically this line goes up and down and up and down. When you see a kind of drop down on this red line, because the red line is the summary of all open trades, then the deeper down this line goes, the deeper or the larger the drawdown is. So the drawdown also, if you wanted to liquidate your account at the point of a drawdown, which we do not recommend, wait until you have a global close where you actually capture the profit when the software no longer trades. But if you wanted to do it, you would have to be taking the loss of the then the drawdown becomes a loss, because there's no way to recover from a trade that has been open and then open and has a loss and then subsequently closed with that loss. It's like when you have a car that you buy from your manufacturer, and we're going back to the car dealership example. You buy a car for $10,000 and you sell it for $8,000. Well, you took a $2,000 loss. There's no way to recover that. But let's just say that the market is soft. The car market is soft. You don't have a whole lot of buyers coming in. You bought the car for $10,000. It's sitting on your lot. It's not moving. But you wait until the situation improves, and now later on you get a buyer that comes in and says, okay, I'll give you $10,500. So it's really up to you. Do you want to sell your cars at a loss at the time when the market is soft? And that's the same thing as, do you want to close your trades at a loss when the market went against you, or do you want to allow the algorithms to work out of the hole or fill the hole that the market created for you? And that's really the difference. So getting back to our little example where
Joseph, I have a quick question, if that's all right with you.
Yes,
as we're in the open and closed deals right here, with this showing, why would there be a discrepancy, if you will, that might be the proper word, between what the software shows and what the broker shows as far as profits?
Well, there are certain fees that some brokers will charge. They include rollover fees, also interest fees on the margin, because you're really only using a certain percentage of your capital to control those trades. And depending on how long you stay in a position, those fees could be higher or lower. It's basically kind of the same thing as a commission, and we have no control over those commissions, and we don't know what those commissions are because they vary from from time to time. They depend on prevailing interest rates, what the broker's rules are, etc. So there might be a small discrepancy. It shouldn't be a large discrepancy. If there is a large discrepancy, then the broker is playing games, and he's trying to be a magician and saying, well, now you see your profit, now you don't. And again, you need to take a certain level of responsibility and make sure, particularly not necessarily in the middle of a sequence, because the chances are that because of different margin requirements and the way the broker closes trades as opposed to we keep track of trades, the account may not synchronize. But when you have all trades closed, then it should be within a couple of percent. There shouldn't be a whole lot of more difference, but it will be. Here's how I look at it. Say at the end of 6 months or at the end of a year, if you're 20% up or whatever it happens to be, just take it as the cost of doing business. You go to an auction, you want to buy a car. Guess what? You gotta pay the auctioneer his commission, and that's really what it is. We don't keep track of those on our end because we're not in control. We're not charging him, and that's something that is a function of the broker. Would that answer your question?
I believe that does answer the question. One thing I would like to add to that, Joseph, as possible, certainly taking responsibility is grand, but do we also have someone that is working on behalf of our clients as our introducing broker? Would this be a good time to bring that up?
Well, yes, but you don't want to be calling the introducing broker, every time you look at your account.
Amen.
Because they're not getting paid. You're not paying them. They're getting a very, very, very tiny, minute commission from the broker. And yes, we have experienced a fairly large level of I would say sometimes unnecessary calls to the IB. Asking questions that are right there in front of the client. You're responsible for your own account, and please learn, if you're using the software, please learn not just the inner workings of the software, but learn about how the broker pairs out the trades, how it relates to our software. In other words, let's just look at it this way. Right here, you have. Whoops, I missed that. Let me stop this for a second. Right there. In this situation, you have a bunch of trades open. You understand that when you place a short and then you place a long, when the software does this, and they are the same size, the broker is going to pair them out and not show anything in your broker window. Right? In this particular case, you have 2 mini lots long, 3 mini lots short. That means that what is your net position here? Your net position is 1 mini lot, 0.1 standard lot short. Now the broker is going to show that as this sell 1,000. So please do not call the IB asking, well, I've got my Forex data is showing 10 trades and my broker's only showing 1. How is that possible? It's not matching. What's going on over here? Please understand that if you go through our tutorials, they are more on these very fundamental basics. They are very informative, and I would suggest everyone, if you want to use the software, it's mandatory that you watch all of our videos and all the information that we provide to you, because we go to great length and great expense to give you all these tools. Trust us when I say that we do not make enough money to babysit you for the rest of your natural born life every time you don't understand a very basic thing like that, to be calling us and thinking the sky is falling because the broker's trades do not match what is in the software. I guarantee you this, at the end of the closing sequence, everything will match. The broker will have no trades, we will have no trades, and that's the way where you can check your balance. During the sequence, it will be changing in real time, and just let the software close all trades, and then do your comparison. So, having said that, what I'd like to do is basically, we looked at this. Let's summarize. We've traded right here. We're on the 30th day of March. We've traded a total of 3 months. How long did it take us? Probably 20 minutes or so. We have a total net profit of roughly about 1,800 pips. There's some trades that are still open. We need 84 pips to close all deals. We could actually do this, close all deals, yes, boom. So now we have no trades open, we're flat. Our total net profit is 1,809 pips. We had some drawdown. Our maximum drawdown was 726 pips. We made roughly about 18% in 3 months, give or take 5-6% or so. So that's really the way the software works. You saw it in a time capsule that lasted 20 minutes, but represented a total of 3 months, and this is really what happens in real time. Now, having said this, I will close the simulator, and what I want to do is I want to go and create a strategy from scratch, create the actual algorithms, how I do it, give people some ideas, and then when we're done, we will actually give people access to that account, and they can watch and see what happens. I'm not saying that this is going to be a winning one, because I'm just going to be just kind of shooting from the hip for the illustration purposes. But it will be, I think, very informative and insightful. But before I go, any last questions on what we've covered so far?
Joseph, there are a couple questions here real quickly. After a global close, can I select the settings that will stop trading and let me make either cash adjustments or withdrawals out of my account, or is that something that has to be done by you, or how would that happen?
You can actually, if you don't have that function built into the strategy, some strategies have that, some don't. If you request it, we can include that function in your strategy, and then you can go at your at your leisure into the function or into the advanced management window, and you can activate that function. And I will show you how to do that and where it's done.
Okay, very good. I'm scrolling. Joseph, I mean, I am just being bombarded with questions on my end over here and feverishly trying to answer as many as I can, particularly those that are not related to technical issues this evening. Let me scroll back through here. I bet I have over 100 questions already, Joseph. Let's see. Actually, why don't you go ahead and start? I will continue to scroll through, and if you don't mind, if I can just, as you're moving forward, if something comes up that's related to where you're at, I'll go ahead and bring it back in.
All righty, fair enough.
Excellent.
So let's go and start with a blank account. Here it is. And let's call this one, let's call it This will be our test, okay? Anybody wants to write this down? The login to this account through the standard, through your viewer will be, let's see, will be forex-dat space TEST, all capital letters. So forex-dat test, and the password is the very same. For the number 4x, just like we have the strategies, forex-dat1, forex-dat2. So this is forex-dat space test. Okay. So we'll start with a clean slate. We've got $100,000 available. We're going to build a $100,000 strategy. The harvester has absolutely nothing. We will build each algorithm individually right here, and we're going to probably take at least 15 to 20 minutes to do it, maybe as much as half an hour. And this will be ready to trade real time right there. Now we've got the trends, we've got the TS matrix. We're gonna trade pound yen. I like pound yen. It moves quite a bit. And so let's go ahead and start building our strategy. Okay. First of all, we will set our stealth mode to off. From off to on, so that we don't show the broker any of our working orders. And let's go for it. So we open the harvester window and start on the left-hand side with the symbol. We'll select pound yen. Let's go trade pound yen. There it is. Now we'll select an operation. Do we want to buy or do we want to sell? Well, we're going to buy and sell because we don't really know where the market is going to go. Currently, pound yen might be going down, but it may very well reverse and go back up. And so if we only select one operation, then we might find ourselves on the wrong side of the trade from time to time. So let's just select buy. The next one we're going to do, we'll select sell. Trade interval. Trade interval, this is the distance between individual trades. And for the time being, I'm going to put a trade interval of 50 in here. What it means that within a 50 pip range, there cannot be any more than one trade generated by this harvester. Okay? In fact, what I'm going to do, I'm going to say 75. Okay? Now, how many working orders? This is the number of working orders and also the number of trades that ultimately this harvester can generate. It can be anywhere from 1 to unlimited. But I'm going to, for the sake of simplicity, I'm just going to choose 1 and click these initial deals only. I don't want any more than just 1. Because if I didn't choose this button over here, the 1 would repeat itself to infinity. Only one trade would be placed, but when that only one order would be placed, but when that order got filled, another trade would be placed 75 pips away from that trade. But I don't necessarily even need that. I just want one trade per run of the harvester. Now, as far as starting price, where do I want this harvester to start? Well, I don't really know where the price is going to be when my conditions are met, so I'll just say from the current price, whatever the current price happens to be at the time, right? Now, the trigger move, this is a confirmation of the direction of the market and in the direction of our requested operation. So if we want to go long, if we want to buy, After we get the trading signal, then do we want the market to confirm that? In other words, do we want the market to continue for a few more pips to confirm that in fact the market is going in this direction? And my answer to that is yes, we do, right? And the way I will say it here or determine it here is by saying that I want the market to move an additional 15 pips from the time I get the signal. Now, the markets go up and down, up and down, up and down, and I want the best price execution I can. So what I will do, I will put a minus sign in front of the 15, which signals or tells this harvester to trace or trail the market to the lowest possible point and then open the harvester 15 pips or open the trade 15 pips from the lowest point it achieved. So in other words, if the market is retracing and going down, then I don't want to place the trade immediately when I get the signal, but I want to confirm that. I want to confirm that it is going up. Well, from which point do I want to confirm that? Well, I want to confirm that from the lowest point that the market reaches. So in other words, if the market goes down, say 100 pips, and it's retracing, this trade will not be placed until the market reverses and goes back up 15 pips. And that's my confirmation. But we'll get into this in just a little bit again, because we will set additional conditions for this harvester. Now, where do we want to assign this trade or these trades, the trades generated by this open deals window? I'm sorry, what open deals window we want to assign the trades generated by this harvester to? Let's just say we want them in the very first open deals window. Let's just say 1. We're not concerned about the range over here. It doesn't matter how far or how far up the market goes or how far low the market goes. We just want to keep trading. And we'll also say that we want within the very same open deals window, not only do we want the trades to be 75 pips apart if they are created by the same harvester, but we also do not want any other trades of the same currency pair in the very same open deals window, no matter what harvester or which harvester created them. So we'll just say 1 deal per trade interval, include all the trades within the open deals window. In this case, it is 1. We don't want to overtrade or have too many trades crowded next to the very same price or next to a price where there's other trades already. So let's just skip over this area, and what we'll do, we'll select a trade recovery, and we'll select a trade recovery, say, using the second deal formula. That's my favorite one. We'll set it up in just a little bit. Ignore all of these other items. They are not all that necessary. Now we go into the stop parameters. What will stop this harvester? Once it runs, what will stop it? Okay, well, do we want to stop it manually only? No, we don't need to stop it manually, because we're not going to be at the computer when things happen, right? Do we want to set the stop time? How do we know what the right stop time is? So we'll skip that. But I'll tell you what I'm going to do. I'm going to say that when this harvester stops, let's restart it. When it stops, I want to keep trading, and I want to make an aggregate. No matter what happens, I want to make an aggregate of 5,000 pips on this trade. So I'll check that. Now, also, what I want is that if the market goes against me, and say if the market goes against me by at least the same number of pips as it takes for me to confirm the direction of the market, then I'm assuming there might be a little bigger retracement or market reversal, and I'll say, you know what? Let's just stop this harvester. So I'll say 15 pips. If the reversal is greater than 15 pips, stop this harvester, but only if there are no trades open yet. After the first trade is open, ignore this function altogether. Ignore this parameter. Don't worry about it. Once a trade is open, we don't want to stop trade. We want that trade to go and work itself out, because it has zone recovery attached to it, and if we stopped it, the zone recovery would be turned off. So now the next thing is setting up the deal formula. And the deal formula is basically nothing more than the size of your trade. So we've got, what's our balance here? We've got $100,000 to work with. Let's just say that we're going to trade one standard lot, or 10 minis. Our default is a mini lot. That's what it says. Number of mini lots, 10. Do we want an individual profit per trade? Well, we don't need to be concerned with that, because we have an aggregate profit already set for the harvester, so we can just skip all the way down here. And we want to set a profit stop. And the profit stop is once you're in profit a certain amount, if the market reverses, you don't want to leave that on the table and that profitable trade to be turned into a loser. So let's just say that if we're 155 pips in profit, then we're going to trail this trade, and we will set a profit stop 55 pips behind the market or below the market. We're 150 pips in profit. The trail is set 55 pips lower. That means that we are capturing a minimum of 100 pips on this trade if the worst were to happen at this point, and that is the market reverses. So we'll get taken out, we'll get stopped out, but minimum profit we're going to take is 100 pips. Now, how we're going to trail that trade once we're trailing it? We can trail it with a standard trail 0, 0. That means that every time the market moves 1 pip, the trail will be moved together with the movement of the market by 1 pip as well. But what I prefer is 2/1, simply because this tells the software to move the trailing stop 1 pip every time the market moves 2 pips. So this actually gives me, over time, gives me a little more room to play on small recoveries or even larger recoveries later down the road. Now, my next field is, do I want to close any trades at this profit stop? And I'm just going to leave it at 0. I'm just going to trail the entire position. I could take part of this position off with the 155 pip profit if I said, okay, I want to take half of my position off. I'm going to take 155 pips on five mini lots and leave the other 5 mini lots to play itself out. But I'm not going to do that in this particular setup. I'll just keep it simple. Now, do I want to set a stop loss? You can if you want to, but if you're like me, then you'll skip over this, and this is basically the entire deal formula. We'll click OK. The shorthand for the deal formula is right here, and we're almost ready, except we haven't set up our zone recovery yet. So we'll go back to the zone recovery, and the reason why we have to set the deal formula first, because the zone recovery requires this initial or original trade, the size of the original trade, so that it can calculate the legs of the zone recovery. So we go into the zone recovery, and basically we're going to define 4 parameters. The first parameter is how many pips would the market have to go against this trade before the zone recovery legs get activated or get triggered. And let's just say 150. That's about the average what the market, what this particular market moves on a daily basis. So if the market moved against me 150 pips, guess what? I want to start my my recovery protocol and start covering my rear end. So that's that, 150. Now, how many pips? Once I get into zone recovery, once I've opened zone recovery trade, how many more pips does the market have to go in order for me to recover? Well, let's just say 150. Keep it simple. Next, we need to figure in the approximate spread and fees. So what is the spread on this particular a currency pair, the difference between bid and ask, and plus there might be some fees that the broker is going to charge you commission. Let's just say it will be 6 altogether, okay, and then you cover it. Now, and finally, when I recover, how do I want to recover? If you leave it at 0, you're recovering at break even. And of course, you're closing potentially 3 positions or 3 trades, and there might be slippage, so give yourself a little room just in case there is slippage. Let's just say I want to make 50 pips. If I don't quite make 50 pips, I make 10. I got out of it. I'm, and I get out of Dodge alive. In other words, I haven't lost any money. Now, to calculate the leg, simply click on recalculate on that button, and it will give you the individual sequencing of how large each leg has to be in order to comply with your zone recovery requirements. I typically like to use only 2 legs because the more legs you use, you're entering into a geometric progression like you would on a martingale. That is absolutely unacceptable. And so what I'll do, I'll just click on this this button, delete last, and I will delete all the other legs, just leave 2 of them, right? And that's all I want. And I'll click OK. And now I have my zone recovery set up. All I have to do is simply click on the Add button. Ooh, I forgot something. I forgot to specify the second deal formula. And the second deal formula is basically how the zone recovery legs will be behaving. So let's just set that up real quick. My second deal formula, and I'll just put 1 because I need to have something in here, a number of mini lots. 1, how do I want to trail? How do I want to trail this trade? I want to trail it 155 over 55, same thing, but for the trailing, I'll put 10 over 5, which means that the market moves 10 pips, and every time the market moves 10 pips, it needs to move 10 pips for the trailing stop to be moved, and it will be moved by 5 pips. So this gives me a little more play on the trade recovery leg. So I'll say OK. Now I have the shorthand for the second deal formula in here. Now some of you might be wondering, why did I put only 1 here when I'm trading 10 mini lots in my original deal formula? That's because the parameters of the zone recovery that I have calculated, or that the software calculated, they're right here. They take precedence, and they will overwrite any number that you will put in here. But having said that, we'll click Add, and there we are. We have our first harvester that is created. Now, So the harvester is created. We've got all of our parameters set right here. And the question is, well, it stopped. How are we going to be starting it? And what is going to start it? And we'll do this in the advanced management, right? So before we go into the advanced management, let's open up the TS matrix and look at the different arrows or the direction of the market that we feel needs to be present in order for us to start trading. Well, typically I only like to start trading when the market is going fairly strong, and if I'm going to open a buy position, the market should be trending to the upside. And the way I will set it up is that in my, let's just make this a little smaller here, put it down here. In my advanced module, I have a number of events that I can select, and these events will trigger an action. Well, my action is that I want to start trading, but I want to create a contingency under which the software will trade, and only when this condition is present, the software will trade. Under no other condition. And I will set it up by opening this this menu down here, this pull down menu, and I will go in at the bottom to the TS matrix, and there's many different options. The one that I'm going to choose for this particular strategy is TS matrix percentage synchronized. So I'll select that one, and I will select the setup. And setup is basically your TS matrix, at least it is, except it is a blank canvas. It's not populated with any arrows. What you're looking at here is real-time live market. Now, you will need to create a certain condition that you want to be present in the live market on this real live TS matrix. You need to create it on the blank canvas. And when that condition is present, then you assign an action to that condition. So our action will be contingency because we want that condition present. So let's look at it and let's see what would be important. And the way you set it up is you just click on the little dot over here, and you just scroll through the three options that you have. So here's what I want. I want the Forex DAT trend indicator to be showing an uptrend on the 60-minute, 240-minute, and daily chart. Then I want my Heikinashi to be showing uptrend on the weekly, daily, 240, and 60. I'm not concerned about the short term at all, because that has, you start trading the short term, you're going to lose your shorts. I promise you, every single time. Don't worry about that. Okay. So then I want the SMA to be pointing upwards on the 14 period SMA moving average, as well as the 50 period moving average pointing upwards on these three 60, 240, and daily time frames. Okay, so this is my condition. I'll click OK, and I will have to specify the percentage by which those arrows have to be synchronized, and I'll say 60 and greater than. So the TS matrix percentage synchronized has to be greater than 60. But look at this. I made a mistake. I forgot to select my currency pair. So I'll just reset it. I'll select the correct currency pair, which is pound yen right here, and unfortunately I'll have to redo it. So we've got the trend indicator. We want this to be to the upside. We want the Heikin-Ashi, all four to be to the upside. We want the 14-minute to be upside. And always when selecting the conditions, always select the gray line, because the gray line determines or the gray line shows the prevailing condition, not necessarily the entry. The entry will only be displayed for one time period, depending on which time period you're looking at, and you might be waiting for a while until you get to the beginning of that particular or the beginning of that cycle. Now, also I wanted to have these three, 1, 2, 3, daily 240, 60. So now I have the correct currency pair selected. I've got a total of 13 arrows. I'll click OK. 60% of them have to be synchronized. I'll add my condition in here. And I see that this is condition ID number 1. I'll just leave it on contingency because I just want this condition to be present, and this doesn't need to be enabled on the contingency only conditions because we're not causing an action. We're just only looking to confirm you know, a certain situation in the market. So there we are. We have a condition that we want to be present in order for our harvesters or our harvester that buy or go long to start trading. In order for me to tie the two together, I will have to go up here and edit my harvester by adding the condition ID in this space right there. Check it and say start this harvester contingent on this advanced right here, event ID number 1. So one more time, it's the event ID number 1. There it is. I'll click edit, and now that condition is present. Now, in addition to this contingency, I'm going to create another contingency that chain links to another contingency just to confirm that really the market is going up. And it will be a completely different setup for my second contingency. What it will be is that it will be a value, a certain value. And I'm going to specifically be looking at the market strength value. How strong do I want the market to be to the upside in order for this harvester to start trading in the upwardly direction or start buying? And I'll set that condition up by, again, opening up my TS matrix. I'll reset it. And on the market strength line, I will highlight, any value. Again, TS matrix, any value. Make sure that I have pound yen. I'll reset the previous condition. And I'll highlight 60-minute, 240, and daily. I'll say OK. And I want to say I want to have at least 35% market to the upside, or market with a 35% strength to the upside in order for me to start trading.
Joseph, may I real quickly, we have quite a few people that are brand new here with us. Do they need to know all of this information to start trading with us?
No, they don't necessarily need to, but it's good when they understand what is going on, so that we don't have to field these questions, and because we get really these calls every day. What happens here? What is this? What is that? Where's your advanced training? I want to be able to set my own harvester, etc., etc. So
Excellent.
I'll just, yeah, I'm almost done here. So I have a contingency that ties into another contingency. In order for them to tie them together, I'll just say that this event is contingent on event number 2. I'll just edit that. The second event doesn't need to be contingent on anything. That's plenty. Now, in order for me to be able to set up the other side of my trade, what I want to do is create the same contingency for the opposite direction. And the way I'll do it, I'll just click on the setup, and I will just invert or reverse the setup. Now everything is to the downside. I'll click OK. I'll just add that event down here, and I have that event available, except this event will be contingent upon the next event, which is number 4, and that event will be right over here. I want this market strength to be less than minus 35%. So in other words, the market is dropping. I'll add that, and here we are. All of our contingencies are set up. Now, one other thing that I want to do, I want to trigger a trade, and the way I'll trigger the beginning of the trade is that I'll take any signal from my TS matrix. I'll reset it. Any signal on the short time frame. All right, there we go. I'll say OK, and I'll say this is actually an action that needs to take place. I'll say start all of my harvesters when any signal happens. I'll add that. There it is. And then I'll do the same thing from the opposite side. I'll invert those. OK, add. Now, basically, my contingencies and my triggers are set up, right? I'll close this, and I'll get back to setting up my harvesters. And this will go very, very, very quickly, probably about 5 minutes or so, and we'll be done. So since I set up this harvester, and this is a buy harvester, in other words, it trades by opening trades to the upside. We want to set up the same thing to the downside. Now, but before we finish here, what we want to do is create the other trade recovery, and this trade recovery is called improving your cost basis. And the way we improve our cost basis really only when the market goes against us, when the same conditions are present. So if we have one trade open and market reverses, we have the trade recovery if it reverses quite a bit. But if the conditions for trading long are still present, we can add to this position by creating another algorithm that is identical to this one. We'll put it in the same open deals window. But this trade will not be placed and not be opened unless it is at least 75 pips away from the first original trade. So we'll just add one. And you know what? I kind of like this setup. I'm going to add another one. And yeah, that should be all right. I'll just leave 3. Now the same thing I'll do to the downside. So the way I'll set up my short trades is that I'll select the sell, Everything stays the same open deals window. The trigger move will also be minus 15, except the starting contingency will be event ID 3. How do I know? Well, I set it up. Event number 3 is to the short side with red arrows, and that is contingent on 4, and that is a negative market strength, market going down. And I'll just simply add it in there. There it is, right? So I have 3 here, so I'll do the same thing. I'll add 2 more. Now what I want to do is make myself a note. This is, let's call it webinar setup. Today is October 15th, 2014. Oops. And we have a total of 100,000 available. I'll just edit that change. Now we know what we're dealing with right there. So now we have all of our trades set up in the open deals window number 1. But what I really want to do is, what if the market continues to run? I want to take advantage of that. So I will set up the very same trade, except I will do it with a different different trigger move and a different trade interval. So let's just say that my next trade, which will be in let's do it out of here. Next trade, which will be in open deals window 2, different open deals window. I want to keep these trades separately, and that one will open after the market has moved 30 pips, not just 15, but 30. This is my next addition. If the market is moving, guess what? I wanna get in there. I want to trade more, and then if the market reverses 30, I want to stop, and this will be trade 7. I'll add it over here. Actually, I forgot to change my restarts. Every harvester has to restart with its own ID number. And I forgot about that. 5. This one is 6. And this one already is 7. And I'll do the same thing. I'll have 3 of those that will be placing trades in open deals window 2. But what I want to do, I will increase this trade interval to 100 as well. All right, so this is 7. This will be 8, and this will be 9. Now we'll reverse them. We'll make this one a sell. Contingent on event number 3. This is harvester 10. Forgot to specify the trigger move. So this is harvester 10. This will be harvester 11. And this will be harvester 12. There. And let's do it one more time for open deals window number 3. If the market is really moving, let's just say it moved 50 pips, I'll take that back, 45 pips, or reverse 45 pips, we'll stop it. We'll continue trading, and let's just do a 125 trade interval like that. This will be harvester number 13, number 14, number 15, and now we'll reverse it, sell, contingency 3, harvester 16, 17, and finally 18. So we created a setup, an entire strategy that has 18 harvesters, 18 algorithms. Each one also has its own zone recovery. They will play together as a team. They have limitations as to where and under what conditions they can open, how far apart from each other. And now we need to, last thing we need to do, we need to designate our profit. Okay, so our harvesters are done. Last thing we need to do, go into the open deals, set up our profit. Let's just say we want to make $1,000 every trading sequence. And when that happens, we want to restart the harvesters. If we happen to have orphans, let's close them fast. We don't want orphans. And also, let's set up these two functions with the same profit margin as 1,000, as well as, profit target. Check that. We will not worry about any of these. Apply changes, yes. So now our global open deals window is set up. Let's just set up open deals window number 1. Let's do the same thing. But these are sub windows, so let's look for $500 profit here. 250 on the orphans. 500 here, 500 here. Save the changes. And down here, already we know how much we need to close all deals. On this particular window, it's 500. So open deals window 2. Let's just say we're going for 750 here. Just close this with 350. $750. $750, just like that. Apply changes, yes. And last one is number 3. We'll do this one as $1,000. Also deals, 500. This will be identical to the global one because we have the strongest conditions set up for this open deals window. $1,000. That's it. And quite frankly, we're done with that. Now the only thing left is to go to into the harvester, go into the advanced management, and activate or enable these two events. You have to have those activated, because if they're not activated or enabled, nothing will happen. So what have we done? We decided to go ahead and start trading on the basis of the market conditions that we set up. Anytime this will have a change in the direction of the arrows, either on the 1 minute, 5 minute, or 15-minute time frame, it will activate the trading sequence, and we'll start seeing trades very shortly thereafter. Now, if you want to have a function that will disable your trading after the next close, all you do is come back here and select the event called Close All Deals 2. Close All Deals 2 for global deals, global open deals window, which is open deals window number 0. And then we'll say disable all EIDs, and let's just disable it after the first use. We'll add it in. So when you want to really stop trading, you'll just go over here and click on this event or on this condition, enable it. There it is. And when the global close all deals function kicks in, it will disable all of these other events and actions, and your trading will be suspended. But we want to keep going. We'll disable it. And ladies and gentlemen, that's it. Now we have a live working strategy. It is called Forex-DAT space test. There we go. Trading started. As we had a movement right there. Those two arrows enabled or triggered the trading on all those harvesters. So that concludes my my first part of the 3-part series, Understanding Forex-DAT. And back to you, Bobby.
Excellent, Joseph. Well, thank you so much. This has really been a tremendous help. For those that were looking for some of the advanced training that we do offer, I do know that we have 2 additional weeks to follow that will also be of tremendous value. One, I'm sure, will go over the pre-populated strategies, why we have them, how they work, and how you can literally start trading with us without knowing all of the information. However, it is very important, Joseph, that people understand the inner mechanisms. You know, it's quite interesting. You know, everyone wants to know, you know, when they have all of these questions until we get to the webinars and they realize just how detailed this is, and then their heads start spinning. So ladies and gentlemen, just know this: the software works, and it works very well. And what you need to do is certainly understand all of the mechanisms and mechanics that we've gone over in this lengthy webinar this evening, and we'll be continuing to go over the next 2 weeks. But also understand that we do have pre-populated strategies, for lack of better words, a set it and watch proposition. So with that said, Joseph, again, I look forward to next Wednesday night, and I look forward to continuing to address any questions that you all might have. You can refer to the email that you'll get in the thank you follow-up for attending this webinar if you have any additional questions. With that, God bless and good fortune. This webinar is officially over.
Good night and pleasant day to everyone.
Thanks, Joseph. Good night.
Thank you. Bye-bye.